Hello, this is Melissa, your insurance exam queen, and we're doing a class today on health provisions. Provisions is definitely a highly tested topic in every single state. And so we want to make sure that you lock in your needs for provisions. Now, this is health focused.
Hello, everyone. This is Peter. I just have to get something for a second. I have returned as promised. Hello, everyone. My name is Peter Lemieux with the Insurance Exam Queen. I have a couple of minutes before I'm supposed to start, so I'll give you the pitch. I've been in the insurance business for 52 years. 52 years. I probably could be your grandparent. But anyway, I've served worn lots of different hats in the insurance business over the years. One of the things I enjoyed was when I got to recruit and train new agents and teach them the business. So it was kind of natural about 15 years ago, part-time, I would start teaching classes and helping people to pass the state exam. That's where I met Melissa Dillon, our queen. When she launched her own business, I asked her how I could help. And so that's what I'm here. I'm here to help her with her business. Today, my assignment, which I have accepted willfully and joyfully, is I'm going to chat with you folks about health insurance provisions. Now, what is a provision? Let's just start with the big picture. A provision is not a rider. It's not something extra that you put on the policy and pay extra money for. A provision comes with the policy. It's a part of the policy. When you get the policy, it's got provisions in them. Just like when you get a car, the steering wheel comes with it, right? Understanding the provisions, I equate with having a little manual in your car in the glove compartment, which basically tells you how the car works. If the inside lights aren't coming on, they tell you what buttons to pick and choose and stuff like that. Provisions explain to whom now? To the customer, to the client, how this contract with all its legal jargon actually works. What rights does the insured have? How does this whole thing function? It's a part of the policy. Now, understanding that, the state wants to make sure you are qualified in your knowledge to sell insurance. They are going to ask you about provisions a lot, because if you don't understand provisions, you don't really understand how the policy works. And so you're going to have provisions no matter what you're studying. Today, I'm going to take a laser beam and only look at the provisions in a health insurance policy. The policy provisions, there's not a lot of them. There's certainly something you should be able to master. So when you get provisions questions in health insurance, you should be able to say, I got them. Another thing you'll notice is that provisions, a lot of them slide over. there's a lot of provisions in health insurance that are provisions in life insurance. So in other words, if we're learning the ones we teach today, you'll find that it'll arm you for other policies you may be studying, okay? But like I said, provisions are part of the policy. Now, the provisions are divided into required and optional. You said, Peter, that they come with the policy, but then you got optional ones. That's true. That's not really a big deal on your test. Let me explain what that means in the real world. The insurance department requires certain provisions to be in every policy. Those provisions, if we were to study them closely, protect the public, and they want the public protected. There are a few other provisions that actually protect the insurance company. And the state insurance department doesn't care if the insurance company puts those into policies or not, because they don't necessarily protect the public, they protect the insurance company. However, since they protect the insurance company, they all put them in. So in a sense, it doesn't matter whether it's required or optional. All these provisions come with the policy. Now, I have a list here that there are 9 provisions I'm going to talk to you about. If you're going to be able to stay with me, I'm not going to go an hour on this, not that much material. But if you're going to stay with me, it wouldn't be a bad idea to write them down, okay? If you have to go early, I will read the list now. I don't know if you can write shorthand, and then I'm going to talk about each of them. Excuse me. A little tea will help. There's a contract provision called entire contract. There's another one called time limit on certain defenses. There's one called grace period, one called reinstatement, one called claims procedures, one is physical exam and autopsy, another one legal actions, change of beneficiary, and the last one, the 9th one, are the essential health benefits in a policy. You're going to find that these are not hard to understand. And in fact, the name for almost all of them tells you exactly what it's about. Therefore, in my humble opinion, this is a chapter made for you guys to score well on. If you're going to get 7 questions on health provisions, you should be able to get 5, 6, or 7 correct. This is a chapter for you to load up on correct answers because it's not complicated. With a little bit of effort, you should be able to master this completely. I want to start off with provision number 1, the entire contract. What this says is that the entire contract is the policy that the insurance company issues and the application that our client completed, stapled together. The two together called the entire contract. Well, that's easy enough to remember. We could just zip along and not talk about that anymore, but I don't do that, okay? Why is that so important? Because if there's ever going to be an argument about fraud, where the insurance company says, I'm not paying the claim because you committed fraud, proof of the fraud is in the application. That's where we find the lie that was intentional and material. And you, Mr. Customer, have a copy of that application in your possession, and you've been holding it all the time. We don't need to produce a lot of extra material. You have it. So the entire contract is going to give our clients the policy, excuse me, and the application. That's all there is to entire contract. Pack it up, got it. The second one is probably the most challenging in this sense. I told you the name will pretty much tell you what the provision's about. This name doesn't do that. It's called time limit on certain defenses. What's that mean? Well, I'm going to explain it. It really is. Now, I'm going to assume you folks have some knowledge here. There's a provision in life insurance called incontestability. What incontestability says, at a certain point in time, the insurance company cannot contest a claim. They have to pay it. It's an incontestability clause. Well, that is in health insurance called time limit on certain defenses. In other words, at what point can the insurance company not have to pay a claim? And in the beginning, it's a little bit easier for the insurance company. You can claim due to material misrepresentation on the application. Well, that sounds a lot like fraud. Material misrepresentation. What's fraud? We're going to remind you. Intentional and material. So in the first 2 years, they leave out the word intentional. Insurance company doesn't have to prove you intentionally did it. But if there's misinformation on the application about something material, they don't have to pay that claim. Now, after that 2 years, then it's got to be intentional also, which could be hard for the insurance company to prove. Here's the test question. Let's boil this down to the meat. Do you boil meat? I don't know. Anyway, fraud is always contestable in health insurance. I don't care if the claim is 10 years later. If something material and intentional was on the application, the insurance company does not have to pay that claim. For time limit on certain defenses, please remember, fraud is always contestable. Okay? Now, that's 2 out of 9. The last 7 are like sliding downhill. I mean, the name is going to just tell us what it's about. That's why, folks, with a little bit of effort, this is a chapter of opportunity for you. What if you got all the provision questions correct in health insurance? You got 100% on this chapter. That's going to go a long way to helping you pass. It's possible because this isn't complicated. It just takes a little study effort on your part. The third one is called grace period. Now, 2 things here. You have to understand what does that mean, and then you have to know how long is the grace period. Just 2 things. I met with a guy once who kept failing the exam, and I didn't understand it because this guy took practice exams and was getting in the high 80s, and he couldn't get a 70. And I found out he was a memorizer. I'm taking a tea because I have a little bit of something in my throat here. What I mean by a memorizer is he took so many practice exams. If you ever gave him a question from his practice exam, he was going to get it right. The problem with that is the state doesn't use questions from practice exams. They have their own. So when he got a question that was a little bit different, he got confused. And I couldn't understand that. So I asked him this question. What is a grace period in health insurance? And he said 7/10/31. Well, that's how long it is. What is it? And he stared at me. Had no idea. No idea. Folks, you got to understand the provisions to explain them to your clients. A grace period says if you're late with your payment, we're still going to cover you, even though you haven't paid for it, for a certain period of time. I don't know how you understand the word grace. Grace is a period of forgiveness or whatever we want to call it. Please try to remember it this way. If you pay rent or mortgage and it's due on the 1st, and you don't pay it on the 1st, you don't have eviction people there on the 2nd to move you out. There's a period of time where you can make a late payment and stay in the house. That is a grace period. Same thing with insurance. You will continue to be covered during the period of grace. So if I don't pay my premium, 2 days later, I have to go to the hospital, but I'm in the grace period, the insurance company has to pay that claim. That's what the grace period is. Now, once when you know what it is, in health insurance, you have to know there's 3 different grace periods. Depends on how you pay your premium. If you pay your premium weekly, and I personally have never seen such a policy, you will have 7 days of grace. If you pay it monthly, you have 10 days of grace. Any other way, quarterly, semi-annual, annual, you're going to get 31 days of grace. Now you need to know that. That's why that kid, everybody's a kid to me, I'm so old. When he told me 7/10/31, what he was telling me is how long the grace period is. 7 for weekly, 10 for monthly, 31 for every other mode. Now you certainly got to memorize that. You got to know that one. But if you know that, but you don't understand what a grace period is, you only halfway ready. Now, the way it works technically is if I go in the hospital during my grace period, the insurance company must pay that claim, but they are allowed to take from the claim the amount of money due that you didn't pay, because the insurance isn't free. So if you're paying monthly, they would pay the claim minus your 1 month's premium so they could get the payment in. So that's the way it works. Don't be confused about this. It's a relatively simple concept. Remember, you don't get kicked out of your house if you don't pay on the first, and you don't lose your insurance if you don't pay on the first. You get a period of grace. Next provision, reinstatement. Reinstatement explains to our customer, if you lapse this policy, in other words, grace period went by, you didn't pay for it, now you're not covered at all. They're not paying any claims. You lapsed your policy and you want to get that policy back. What is the procedure to do that? That's called reinstatement. Restoring your old policy rather than going out and buying a new one. You just say, I want to get this one back. And the rules go like this. The insurance company has to accept an application. Hear me correctly. They have to accept an application for reinstatement. They don't have to reinstate you. If you want to reinstate, they'll say, okay, fill out this form. And then we'll think if we're going to reinstate you or not. So what must the insured do to get a reinstatement? Number one, probably the most important, you must prove your health. So you're going to have to answer health questions. The insurance company could ask you to take a medical exam. They don't usually do that, but you're going to have to answer health questions. And if the insurance company doesn't like what your health has become, they can say no soup for you. Okay, we're not going to reinstate you. Number one, prove your health. Okay, I'm still healthy. I answer all the health questions and we're doing good. Number two, pay all your back premiums. You can't just start fresh. You owe us 2 full months. So you got to catch up the back payments and prove your health. Those are the 2 most important things. Make your back payments, prove your health. But there are a couple other things the state can ask you about. There's a rule in health insurance, only in health insurance, that you apply for a reinstatement. If the insurance company doesn't reinstate you in 45 days, you're reinstated. The purpose of that is the state is saying to the insurance company, excuse my English, don't jerk them around. Say yes or say no, but don't make them wait. Okay? 45 days, the insurance company doesn't answer you, you're reinstated. Now, you still got to pay the money, but you're accepted for reinstatement. Okay? So that's a possible test question on reinstatement. The other one, got to pay attention to this one because it can sound confusing. Once I reinstate a health insurance policy, I've proved my health, I've made my payments, and I'm reinstated. What's today's date? The 12th, it doesn't matter. Let's imagine it's the 12th. So I got insurance on the 12th, right? In health insurance, sort of. In health insurance, once you're reinstated, you are immediately covered for accidents, not sickness. You have to wait 10 days before your sickness starts. Today's the 12th. Accidents now, sicknesses start on the 22nd. You just got to know it, okay? Do I have to understand it? Well, not really, unless you're going to write a book, but I will explain it to you. This was built into the law on provisions because what if the client is sick? They know they're sick, but they don't know what it is. So they can ask the health questions that they've never had this, they've never had this, they never had that, and actually be telling the truth. But as soon as they get that policy, they're going to go into the doctor, get the test, and see what's going on. The insurance company is not stupid, okay? So what they're going to say is, we'll cover accidents right away. But if you think you got COVID and you want to go in and we're going to pay for all of that, we won't cover that until the 22nd. Just in case you have, may I use these words, pre-existing conditions. Now, don't fret. People are saying, I didn't think we could avoid out pre-existing conditions. Just ride with me, okay? On a reinstatement, on the test, accidents covered immediately, sickness 10-day, here's the word, probationary period. There's a word you ought to learn for the test. A probationary period. I'll tell you what it is now, even though I'm wandering into the woods a little bit. A probationary period is you're on probation, and during that time, we're not covering you. Most commonly happens when you get a new job and they say you got insurance, but it doesn't start till the 1st of next month. Between now and the 1st of next month, you're on probation. You're at the job, you're getting paid, but your insurance has not started until the probation period ends. On reinstatement, you have a 10-day probationary period for sicknesses, not accidents. I don't know how much of that you can remember, but those are all the potential questions you can get on reinstatement. If you're serious about getting 100 on this chapter, you're going to write those down and make sure you're familiar with them. The next provision is called claims procedures. Claims procedures basically instructs the client and the insurance company what are the limitations on submitting a claim. And there are 3 different numbers in here that can show up on your test. Your test loves numbers, by the way. How I learn numbers, I put all my numbers on flashcards, and I read them every day. The first one is you must notify the insurance company that you're going to be submitting a claim. We call that notice, notify. It basically can be done with a phone call. It's just saying, look it. I'll use property and casualty. Someone broke in my house. I'm going to be submitting a claim. That is the notice of claim. Now, we don't think of that in health insurance very often because the client rarely does that. If you go to a doctor or a hospital or an urgent care, they do that for you, okay? But if you had like a limited policy, like an Aflac accident policy, no one's going to submit that for you. You have to call Aflac and say, hey, an accident, my arm's broken, I'm going to be submitting a claim as soon as I get the bills. Notice of claim is step 1, and there's a number on that. You're supposed to notify the company within 20 days. Notice a claim, 20 days. Now, between you and I, if you forget or something like that, and you did a little bit later, they're still going to pay the claim. What's the importance of 20 days? It's a test question. Notice of claim, tell the insurance company within 20 days. Next the insurance company is supposed to send you claim forms, and they are supposed to do that within 15 days of your notice. Now, in the real world, they're not doing that because you usually have claim forms in the policy or online or something like that, or they can email it to you or whatever. But the test question is 20 days to notify the claim, 15 days for the insurance company to send you the forms. Third number that you got to know, I now have 90 days to submit proof of loss. What is that? It's the doctor bills, the hospital bills. It's whatever it is you want to get paid back for, the dental bills, whatever. Or emergency room. You get those bills and say, here's proof that I had the loss. You have 90 days to fill that out and give it to the insurance company. So, my friends, claims procedures, just like grace period, you got to know 3 little trivial things. Notice of claim 20 days, sending the forms to you 15 days, proof of loss 90 days. Those are the potential test questions. The insurance company is then supposed to pay as soon as possible, whatever that means. There's no number connected to it. Okay. And finally, you get to tell the insurance company whether that claim gets paid to the hospital or to you, who gets the check. The big ones on this is the first 3. Notice of claim 20 days, claim forms to you 15 days, proof of loss 90 days. And that's going to answer the provisions on claims procedures. We're whipping through this thing, okay? So we're making sense of this. A kind of silly one to me is physical exam and autopsy. First of all, it's hard to think of why an insurance company would do an autopsy on a health insurance claim. Life insurance, I understand that, but there's examples. I'm not going to give them to you. The real purpose of this one is, and it's used, is physical exams. Now, to understand where I'm coming from, I want you to focus your attention on one policy, disability income. Okay. Charlie goes out on disability income because he hurt his back. Okay. So the insurance company approves that. They get a letter from the doctor and they're sending him money every month for his disability. The insurance company has a right to ask Charlie to prove he's still disabled. Take a physical exam. Now, workers' comp does that. Disability income does that. Charlie, you've been out for a certain amount of time. Give us a letter or a proof from your doctor that you, in fact, still disabled, which is going to require you to go to the doctor for an exam. Exams always paid for by the insurance company. But that is how we use physical exam. Here's the test question. How often can an insurance company require that? And here's the answer. As often as they deem necessary. They're going to pay for it, but maybe they think you should be better in 3 weeks. So in 3 weeks, they ask you again. They can do it as often as they deem necessary. That's the answer to the question. That's really all there is to physical exams. The insurance company has a right. They pay for it as often as they deem necessary. The next provision is a kind of funny one. Legal actions. In legal actions, they're going to tell their clients how to sue the insurance company. Yeah, you have a right to sue us if we don't pay the claims right. And here's the rules. So in legal action, they tell the insured how they would file a claim. And you can't file it in the first 60 days. You have to give the insurance company a chance to work on the claim. But you can file a claim between the end of 60 days and 2 years. Okay? Beyond 2 years, statute of limitations, you can't do it. So the legal action tells you 60 to 2 for you to sue. 60 to 2 for you to sue. That's the test question. 60 days to 2 years, you can sue the insurance company. And that provision is called legal action. Now, another one that doesn't make a lot of sense in health insurance is a change of beneficiary. Well, let me explain that, okay? So people are asking me to. Yes, I'm sorry. You probably wrote this a long time ago. Yeah, expect me to say your name. Venkataro. I'm sure I messed that up. But you summarized exactly what's needed in reinstatement. You probably did that 10 minutes ago. I'm sorry. Change of beneficiary is a little strange one because I'm going to ask you, top of your head, which health insurance policy pays a death benefit? Because you need a beneficiary to receive a death benefit. And the answer usually is none, but there actually is one. A lot of people don't know this. Accidental death and dismemberment is a health insurance policy, not life insurance. Now, the reason for that, if you care to know, life insurance pays when you die. Accidental death, you have to die a certain way. If you have a heart attack and die, they're not paying anything. So it doesn't qualify as life insurance. It's a limited policy in health insurance that only pays in the event of an accident, and you have to die within 90 days of the accident. It's a restricted policy. So it's a health insurance policy. We would need to name a beneficiary if we have this policy. After that, there's nothing complicated about it, okay? Beneficiary, contingent beneficiary if the beneficiary is dead. And then the question they love to ask is irrevocable beneficiary. My friends, I've sold life insurance for 52 years. Not once have I put in an irrevocable beneficiary. Not once has anybody even asked me about it. But it's on every single state exam like we do it every day of the week. Irrevocable beneficiary empowers the beneficiary. You cannot change that without the irrevocable beneficiary's consent. So who would want to do that? Okay. So it's not done very often, but it's on the test. Just remember this. If you want to change an irrevocable beneficiary, you cannot do that without that beneficiary's consent. Now, the last required provision, and then after that, I have a couple of optionals. The last required provision is called essential health benefits. Where I'm coming from with this is everybody knows there's an Affordable Care Act called Obamacare, but not on the test. It's called Patient Protection Affordable Care Act, PPACA, or Affordable Care Act. That is not a policy. That's a law. If you want to get a policy approved by the Affordable Care Act, it must meet certain requirements or it's not an Affordable Care Act policy. So the big one you got to know is the policy must have 10, question on the test, 10, the number of fingers on Peter's hands today, 10 essential benefits. They are, my friends, benefits that everybody would want on a good medical insurance plan. Doctors, hospitals, emergency care, prescriptions, lab work, x-rays, ambulances, all the things you would want covered. The two that were added when the law passed is maternity and mental health have to be on every plan now. That's numbers 9 and 10, if you care to know. But 10 essential benefits, including maternity and mental health, they can't be taken out of the plan. Even if a person has no possible way to have a child, they're going to pay a maternity premium. Okay? So maternity and mental health are in every plan. 10 essential benefits. That, my friends, are the required provisions that are in every health insurance policy. Bring it to the bank. I can learn those. I'm going to get them all right. Now I need to review with you the optional provisions. That says optional, but they're in every policy because they protect the insurance companies. And as I go through them, remember I told you at the beginning, the name of the provision actually tells you what it does. If you know what reinstatement means and grace period, you got it. Okay. Now we're going to talk about required provisions. And the first one is called change of occupation. Consider somebody buys a disability income policy and they work for a software company and they just work at a desk. It's not a dangerous occupation. They get a very low rate for their policy because they're in a safe job. But then they decide that they want to join the police force on the SWAT team. I don't know if that's the most dangerous or whatever. Sounds dangerous to me. Those people pay a higher premium than somebody in a software. So when you change occupations, you're supposed to notify the insurance company so they can re-rate you. So for this person, they would have to pay more for their policy because they're in a more dangerous occupation. What the change of occupation provision does, a lot of people forget or don't notify the insurance company. And when you do that and you get disabled, the insurance company makes an adjustment on your payment. They take the amount of dollars you've been paying, let's make up a round figure. You've been paying $500 and you're supposed to get $5,000 a month. But now you're on the SWAT team and you didn't tell them. You get disabled. They say, you do what? Oh, $500 for someone on a SWAT team buys $3,000 a month. And that's all they're going to pay you. They're going to pay you the proper amount for your job. It gives the insurance, this is why it protects the insurance company, right? It gives the insurance company the ability to adjust your benefit if you've changed jobs and not notified them. They're going to pay a claim, but they're going to pay the claim of what those dollars would have bought at your position. That's called change of occupation. Very similar in processing to our next provision, which is misstatement of age. Now, what do I mean by that? As you get older, your premium goes up. So if I'm 40, and I don't want to pay that premium, I just tell the insurance company a different birthday. And that makes me 30. I'll get a lower rate because no one asked for a birth certificate on an application. And you want to know something? That's not fraud. You'd think that's got to be fraud, right? You're lying on an application. You know how old you are. You know why it's not fraud? Because there's a clause, a provision called misstatement of age that protects the insurance company. When someone misstates their age and we get a claim, just like I did on change of occupation, we're going to take that premium. You said you were 30, but we find out, because on a claim form, it gets date of birth from the medical profession, that you're actually 40. We're going to take that premium and see how much that bought a 40-year-old. That's all we're going to pay. So change of occupation and misstatement of age are kind of similar in that they empower the insurance company to adjust their benefits to what you actually paid for at the correct occupation or the correct age. A couple of other ones. If you have insurance in this insurer or insurance with another insurer, the insurance company's got to do something, because if I have one policy that's going to pay the hospital in full and another policy is going to pay the hospital in full, here's what we know. They're not both going to pay, where you can walk out with thousands of dollars because you bought extra insurance. That breaks the rule of indemnity. So the insurance company has to have a way, when you have several insurances, to make sure that it doesn't get overpaid. Probably the most common method is they assign one policy as primary and another one as secondary. This would occur if I'm working and I have insurance and my spouse has me as a dependent on her insurance. In that situation, my insurance primary, they're going to pay everything they're supposed to pay. My wife's coverage of me only pays the gaps, the things my policy doesn't pay. They don't give me money in my pocket, but they fill in the holes. So you have a primary and a secondary policy. And that's kind of common. There is another one which you'll see on the state exam where they do what they call a pro rata payment. So let's demythologize this. Pro rata merely means fair share. The companies pay their fair share. I think technically in Latin it means in proportion. But if I got company A that is twice as much insurance as company B, when a claim comes in, company A has to pay 2 times the amount of B. They're paying their fair share. Now, I don't have a calculator, and I don't think we really care about the math here because it's not a math question. But your most common way of multiple insurance is to assign a primary and a secondary. But sometimes you have 2 policies, and the insurance companies decide they must pay pro rata. Each one pays in proportion to the size of their policy. Just understand the concept. They don't ask for math on these things. And don't get freaked out by the word pro rata. Okay? Thank you, Jana. That's very nice. If you just passed, why are you wasting time with me? Oh, you just came to thank me. Okay. Thank you. Folks, I got to jump on this claim. What Jana is saying happens every day. And Jana, I'm deeply appreciative of your compliments. Every day, come in, just say, you guys put me over the top, and that's why we do the work. Okay. We want you guys to pass. So that is primary, secondary, pro rata. There is a clause, it's really no big deal. It's called unpaid premium. All that says is that clause gives the insurance company the right to collect your late payment when they're paying a claim in the grace period. Do you remember I said to you, they got to pay the hospital, but before they do that, they're going to take out your unpaid premium and pay the balance. And you're going to have to owe the hospital the premium you paid to us. That's the way unpaid premium works. I don't see many questions on it. It just empowers how an insurance company pays during the grace period. Cancellation. There are laws about how cancellations work. They're explained in this policy. First one is an insured, a client, can cancel a policy whenever they want. They're not required to pay their premiums. They can just say, I saw an ad and you guys discussed me. I'm not going to put my insurance with you anymore. I mean, they don't even have to have a reason. You can cancel anytime you want. However, the insurance company can't just do that. They can just write you a letter and say, oh, by the way, today you're not covered. What it says is they must give you 30 days notice if they're going to cancel a policy, giving you a chance to go elsewhere. Do I want to do? Yeah, I do want to do this. There's a difference between cancellation and non-renewal. Just get our language right. Cancellation is your policy's done now. Okay. Non-renewal is your policy's coming up for renewal and you or the insurance company decide not to renew the policy. That's not technically a cancellation. That's just non-renewal. There's a simple required provision called conformity with state statutes. I told you the name will tell you. It basically says the policy will conform with the state's rules. So if I have group insurance in Texas and I have an employee in Kansas, this law says our policy will follow the rules of Kansas for that employee. We will conform to the rules of the state. Keeps the insurance company out of trouble. It's in every policy. The other ones are stuff you probably know. If you're in an illegal occupation, you're selling drugs, the insurance company does not have to pay a health insurance claim. If you are high yourself, you're drunk or you're high on drugs, and you get a claim, they don't have to pay the claim. Finally, you should know about the free look clause. The free look clause says, can I get my money back? And every state has a certain number of days. The most common is 10, but you should look up in your state if that's true. Starts at the day the policy is delivered, and you can return your policy within 10 days in most states, and you'll get your money back. It's the clause that says, can I get my money back? Go beyond the free look period, you can cancel the policy, but you won't get your money back. Okay? You could get questions about an insuring clause. The insuring clause is kind of like an engine in a car. It's what makes the insurance go. But what we do with an insuring clause is we tell the clients only the basic stuff, the stuff people ask. Who's insured? Who's the insurance company? What do you pay? What's covered? What kind of policy do you have? That's it. Like 4 things. So does it explain grace period, free look period, reinstatement? No. Just tells you the basics. Who you are, who we are, what's it cost, what's it pay for. It's the highlights of the plan. That's the insuring clause. I'm going to close by talking about renewability clauses. WTW says, listen to Peter. Want to know something? WTW and Jana, I'm going to give you my kids' addresses. You write to them and say, listen to Peter, because that kind of stopped a while ago. Just having fun on a Wednesday. Big day at the hacienda here. It's garbage day. Garbage truck's going to be coming by. That's a big deal here. So I just want to keep you up to date with my life, okay? It's a good thing I teach insurance, because pretty bad life if all you have to look forward to is garbage day. Policies come with renewability clauses. My friends, you got to know this, okay? I'm getting serious here. It's the end of the song here. I'm going to crescendo at the end. You got to know renewability clauses. Some of them, I'll give you the worst ones. Renewable at the option of the insurance company. What a terrible policy to own, because it says the insurance company cannot renew you for any reason, listen to this, or no reason. They just don't want to renew you. What a terrible policy, because they can take your policy away at a whim, okay? There's one that says conditionally renewable. Just listen to the words. It means we will renew it if certain conditions are met. I'll make one up. As long as you have the same job, you can renew it. But if you change jobs, all bets are off. We're not going to renew you. That would be a conditional renewable policy. There's also a policy called non-renewable, where you're insured for a certain period of time and it's over. If you want to continue, you got to go buy a new policy. So those would be the 3 lesser ones in terms of protecting you. Option of the insured, conditionally renewable, non-renewable at all. Which brings me to the 2 you absolutely have to know. There's a renewability clause called guaranteed renewable, and another one called non-cancelable. Now, if you listen to the words, they sound like the same thing. If I have a guaranteed renewable policy and a non-cancelable policy, the insurance company can never take that policy away from me. It's guaranteed that I can renew it, or they can't cancel it. So those are great policies. As long as I want to keep it, I can keep it. Usually up till age 65 when people go on Medicare, okay? But those are great policies. But for you, you got to know the difference. They're not the same. A guaranteed renewable policy, the most common one we sell, gives the insurance company the right to raise your rates. They have to allow you to renew it, but they can give you a new rate as long as the rate is assessed on the whole class of people. They can't single you out. You had a bad year last year, you had a heart attack, we're raising your rates 50%. They can't do that. They can say for everyone in the state, we're assessing a 6% increase. That's called renewing on a class basis. The sick and the healthy get the same increase, but they can increase your rates. They can't cancel you, but you have a choice. Am I going to continue it at the new rate or not? That's what most of our policies are. If you're not familiar with it, just look at your own medical insurance. The rates go up. Look at your car insurance. The rates go up. But in a guaranteed renewable policy, if you want to keep it, you can keep it. Now we get to the best policy, the creme de la creme, as we say in the bar business, the top shelf liquor, non-cancelable. It's the best policy you can buy. It's very hard to qualify for because not only can't they cancel it, get this one, they can never raise your rates. Wow, that's fantastic. That's the best policy. You got to know the difference between non-cancelable up here and a guaranteed renewable. They're the two most common policies. They will try to trick you on that. So, my friends, I want to thank you for your time today. I didn't give you my commercial, just how I feed my family. Folks, I have made a teaching on all 16 chapters of life and health insurance. And you can have access to all of them for like $26. Okay, it's the best deal since they invented cotton candy. What you do is you go on YouTube, Insurance Exam Queen YouTube, and there'll be a button that says subscribe and another that says join. When you click on join, the first thing you will see is Peter's teachings by subscription. It's like $26. It's a subscription. So once you pass the test, you stop paying for it. But it's per month. But you can get all 16 classes, use them, pick the ones you want to hear, pause them, go back, take your notes, and the whole thing's only, it's not even $30. So if that helps you, please do that. YouTube, Insurance Exam Queen, join. Peter Lemieux. If it helps you, that's why we do it. These classes I teach are in depth. I mean, some of them are over 2 hours long, so I go down to all the stuff that's on the test. So you're welcome to have a shot at that. I want to thank you guys for joining me today. I want to thank Jana and WTW for the compliments. It's really simple. Melissa and I want you guys to pass the test, and everybody else that works at Insurance Exam Queen. So use us. Go on her website. She's got practice quizzes, practice tests. She's an amazing teacher. We got the live classes, et cetera, et cetera. So if we can help you, tell us how. I want to thank all you guys for coming today and have a great day. And I'm going to be listing very shortly my live classes for next week. They're not listed yet because I haven't posted them, but they're coming up. I'll post them sometime today. Thank you very much, guys. Have a wonderful day.